Good morning, everybody. Thank you for joining me on this Facebook Live with Building Cashflow. And this is not a financial advice. This is just conversation I have with myself every day as I look at the market, as I decide whether to stay in the market or to get out of it, right? To paper hand. And very interesting movements in the charts so far since Tuesday. Yesterday was pretty green. Today's very quite red in most of the indexes. So indices. So let's have a look. Right. So red in all the indices. Yet when we look at the sector summary, right, utilities, real estate, consumer staples, we can see investors going over there, going to safety over there. But I'm not interested to observe this side, this part of the market today. What I saw very interesting was this. The volatility index, right, is actually helpful also in terms of some of the patterns looks like this. When volatility index goes down, S&P 500 usually goes up. Interestingly, it didn't happen yesterday. It still went up. And volatility index is, a way in that it's an indicator investors use to find out how, if there's an increase in the volume of put options to the market, which also lets investors know that, because investors buy put options to ensure their investments are expecting the market to plunge, you see. So even though slight dip to the volatility index indicating less put options in the market, it is still way above the 20-point mark. Now, what about the 20-point mark? It is that historically, when the volatility index crosses below goes above the 20-point mark and then crosses below, we get to see a bull rally. But it's been staying above. It's been staying close to the 30-point mark for above the 25-point mark for quite a long time already, much longer than what we have seen so far. And what's also very interesting for me as I look at the S&P 500 is this. See how the blue line crosses below the red line? The blue line is the 50-day moving average for the S&P 500. And the red line is the 200-day moving average. When the short-term 50-day moving average falls below the long-term moving average for a security like the S&P 500, it is called a death cross. And let me share with you how a death cross, is described as. So the death cross is technically a chart pattern indicating the potential for a major sell-off and has proven to be a reliable predictor of some of the most severe bear markets in the past history. So will that sell-off be fulfilled? Okay, a real-life example of a severe bear market happening after a death cross happens is China. Let's have a look. Back in 2021, after the February plunge to the China large cap stock index, the CQQQ, right? You can see here the 50-day moving average crossing below the 200-day moving average. Over here. And ever since then, it's been plunging all the way down. What's another example? Let's look at Asia. Over here. Plunging since the death cross happened. So of course, what, as an investor, what I'm interested to look out for is to wait if I'm interested in investing into China and Asia, I mean, is to wait for a golden cross. How long will I have to wait before that happens? I don't know. Don't know yet. Of course, there are some speculations about why the Ukraine-Russia war is happening. W- you know, while noticing the death cross happening to the S&P 500 US market, and very recently, the death cross has already happened for the European market. Now, the death cross has happened to the US large cap stock index, mostly technology companies. So, will it lead to a major sell-off and we enter a severe bear market? That's what I'm interested to see next, right? So, as we can see, this is the energy ETF index. When the 50-day moving average, the short-term moving average stays above the long-term moving average, we will see a bull rally until the death cross happens, right? So what's helping energy to the short-term moving average in energy to stay above its long-term moving average? Demand, a lot of demand. And with the fighting happening, even more demand. Somebody is still buying oil from somebody, despite all the sanctions. So, even though the volatility index had a fall, indicating that there is a drop in the volume of put options in the market, yet the put call ratio is still a black line, indicating that there are more put options in the market than call options. Well, indicating that, of course, call options are basically used by investors to secure stocks at a discount, expecting that there will be an upside. And a black line indicates that there is even lesser call options in the market. So, overall sentiment bearish. But let's look at what could continue to support these bearish sentiments, right? So what are some of the things that can help, that's helping to support this bearish sentiment? Would be the anticipation for interest rate hikes, as well as fighting going on in Russia and in Ukraine. And of course, what's the concern about the fighting? Supply chain gets affected, inflation gets raised, things become more expensive, which will then influence interest rate hikes, right? And it might change the federal government's decision to raise hikes every quarter, starting from, was it end of this month? I need to go and refresh myself. But looking at bond yields, the 5-year, well, there's no higher high at the moment, even for the 10-year as well. Could be indicating that the plunge that happened recently to the bond yield could indicate that investors are swinging towards bonds, right? And yeah, and now it's coming back up. So I'll continue to observe the yield. If it continues to go down, then it's a further indication that we are in a very bear market. What about the percentage of companies that have their stocks above their 50-day moving averages? 37%. Right? Yeah. Fewer and fewer companies are able to keep their stocks above the 50-day moving average and even the 200-day moving average on the New York Stock Exchange. Yep. So try to hold as much cash as you can. Dollar cost average. Try to stick to dollar cost average. If you had not moved your money out of your investments back in, around Christmas last year, yeah, to have cash now is very, very powerful. See, even the volume of money, borrowed money invested in the market has fallen as well. It went up to a high of $935 billion last year. And now it's fallen to 830 billion, 129 billion. Will it continue to fall further? I'm very curious. I hope the results come out soon. And yeah, learn how to navigate a bear market. That's what's next, man. And that's all for me today, man. Like, thank you so much for joining me. And if you have these conversations on your own, please don't have it alone. Come forward, join me. Let's have a conversation together. I'm looking forward to forming a community, right? And I don't expect myself to know everything. And more of us coming together to have a chat will definitely help us to become aware of our blind spots. Thank you so much for joining me. See you in the next live. Bye bye.